And we are back with financial consultant and chartered financial analyst John Rhodes. He manages the Charles Schwab branch here in Augusta, and he joins us this morning to break down the stock market. And he kind of joins us every month to do that and what things are looking like this time of the year. And John, thanks for joining us.
Good morning.
Here.
Great to be here.
Okay, we have said since you have been on, it's been up and down. It's been back and forth. We are now kind of hitting some all-time highs.
Right.
And I believe it's in a really positive way, of course.
That's right.
What's going on?
Well, it just goes to show you, in the short term, the market is constantly vacillating between fear and greed, optimism and pessimism. Mm-hmm. In the long term, as we've talked about before, the U.S. economy grows. It grows most of the time. Therefore, the stock market goes up most of the time, but we go through short-term periods of, we call it volatility, but where it'll go down, a significant percentage in a very short period of time and then rally back. Earlier this year, we were down at low about 15% year to date. We've rallied back about 30% from that, so we're now up about 11% year to date.
Wow. So should we be worried about inflation right now?
Not really. I mean, the inflation is running higher than the Fed would like. The Fed would love to see it at 2% or below. The problem is you've got a lot of global trade changes that are happening that are causing temporary increases in short-term cost, if you will. They'll be corrected over time. I remind clients all the time, think back earlier, over the past 2 decades, deflationary risk was the bigger risk. Mm-hmm. Everything was getting cheaper over time. We're likely to return to that at some point. It's probably not going to be this year. It's probably not going to be next year. But increased technology creates greater productivity, which causes deflationary forces.
What has happened before will happen again.
Correct.
At some point. You just got to wait, just ride the wave out.
Ride the wave, as we've talked about before.
Let's talk about some terms here.
Sure.
One term in particular, we're talking about dividends.
Sure.
For the layman out there, what is a dividend?
A dividend is the way a company returns profits to shareholders. So many people think of the stock market as I have people all the time say, it's like a casino that you're betting. No, you're not betting. You're owning a piece of a company. To depend on the share price to go up is typically the way you make your greatest rate of return. Share prices increasing over time. But share prices don't have to increase in order for you to earn a return on your investment. If the company pays a dividend, and better yet, if they grow that dividend over time, then your return is coming in just by way of their reporting their earnings every quarter.
Now, you mentioned, of course, we're at kind of an all-time high right now with the stocks.
Right.
A few months ago, we weren't doing so well.
Right.
And we were telling people, hey, don't stop buying.
Correct.
You want to keep everything moving.
Called dollar cost averaging.
Exactly.
If particularly for those that participate in 401k plans, every time payroll runs, they're buying another round of their index fund or whatever investments they're making. That way, your average cost is actually lower than the average of the year if you're constantly buying, because you have those opportune buys when it's low. So
does that mean now, since we're at a high, to buy more, or
no.
Do you just want to keep it moving?
Just keep it going steady. You want to buy fewer shares at the higher price, but the way most 401k plans work, you set a percentage of your salary or whatever to go into the plan. And what that means is when prices are high, you're buying a fewer number of shares. When prices are low, you're buying a greater number of shares. They're typically not shares, they're units of a fund.
Right. Okay. If somebody wants to get more information, where can they go?
Best place to go would be schwab.com/Augusta, or give us a call at 706-849-8350.
All right. Thank you very much.
John Rhodes with Charles Schwab. He's got all the information. Let him help you out with all that. Thank you so much, John.
Thanks, Cliff. Thanks, Mary.